What's going on, Restoration Dominators? Rico Garcia, your host, and this is going to be a really exciting podcast, and I'm really excited for this particular guest because I think that we're going to be talking about possibly one of the most important components of business, which is how to acquire funding and how to get absolute sick, wicked business credit, regardless of what your personal credit looks like, what your consumer credit reports look like, or anything along those lines. This particular podcast in this session is going to give you, hopefully, all the tools that you need in order to start heading in the right direction, to start building some absolutely amazing business credit. But before we jump into what we're going to cover, I just want to give a quick big shout out to our show sponsors, starting with C&R Magazine, which again, if you haven't gotten your subscription to C&R Magazine as of yet, just head on over to cnrmagazine.com, hit the big red subscribe button on the upper right-hand corner of their site, pop in your information, and boom, just like that, you now have your finger on the pulse of what's happening within the restoration arena. Also want to give a big shout out to, as you can see, I am currently wearing a Surety shirt, which, by the way, is absolutely awesome. Big shout out to Surety. We'll more about them here in a little bit, so make sure that you keep an eye out for that. And let's talk about the podcast. Ty Crandall is our guest today, and you may or may not be familiar with the name, but he's got an amazing YouTube channel. There's going to be links in the video description below, as well as in the show notes, depending on where you are consuming this content. And he's a high energy individual, and the guy really, really knows his stuff when it comes down to business credit, business funding, and more importantly, how to get there quickly and effectively. Based on one of the things that we talk about on the show today is how the average business owner normally takes around 2 years, sometimes even more, to really get stellar business credit to where they can basically walk in and get any kind of business credit card that they want, any kind of business funding. And he's got a system to where within as quickly as 3, 6, 9 months, in most cases, business owners are at that point, because it's all about having a denial-free experience. And what I mean by that is it's not about going out and asking for business credit or opening up trade lines and doing things like that. It's about knowing when you're ready for a trade line, when you're ready for a credit card, when you're ready for a fleet card, when you're ready to walk into a bank or a federal or a credit union and ask for what it is that you need. In other words, there's steps that have to be taken so that you can perfect your business profile. And that's the kind of stuff that we're going to cover today. This is an exciting topic. I hope that you guys are going to be as excited as I am. Make sure that you take some notes. I feel that this is certainly, for a lot of you out there, this is going to move your needle, your business needle, especially your credit needle, just by taking in this podcast and following some of these super simple steps. And hopefully this is going to create a massive impact for you. So without further ado, let's jump into the show. Let's go.
Welcome to the Restoration Domination Podcast, where you learn actionable advice that moves the needle and helps service-based businesses dominate. Here's your host, Rico Garcia Jr.
All right. And we are live. Ty, welcome to the show. Are you ready to help us dominate?
I was born ready.
I love it, man. I love it. All right, cool. So do me a favor, man. Fill in some of the gaps on my intro for those that may not be familiar with the name and what you do.
Sure. So I've been in financial services for about 20 years. And the vast majority of that is really spent just helping entrepreneurs basically get money to grow their business. So I have the honor of, overseeing about 80 team members. And here at Credit Suite, that's exactly what we do, is really help business owners improve their fundability, fix the stuff that makes them fundable to lenders, and then go through the process of helping them build business credit and get financing.
Cool. So business credit is one of these things that if you don't know, you just don't know, right? And that's personal credit, that's business credit. And there's tons of different reasons for individuals just not really being that informed about how credit really works and the importance of credit. It's not really something that they drill into, individuals at school. Like that's not really like a topic of conversation, right? And, parents, again, if they don't know, they can't teach their kids. And then these kids end up, now being business owners or wanting to expand. And then it always comes to the point where it's like, man, I wish I had more access to money because now I could grow my business. So
Right.
I want to go ahead and kind of talk about two scenarios here, right? And I want to start with the absolute bottom because I think that there's a grand majority of people that have either been there and haven't really known how to recover properly, or are there right now and just frankly just wouldn't admit it to anybody, which is perfectly cool. I understand that, which is you have horrible business credit, you have or don't even know about business credit, and then your personal credit has also been jazzed up because you've been trying to grow a business or whatever the case may be. What are the first steps that people need to take in order to start exploring how to get their hands on more business funding and business credit?
I'd love to, and we can have a deep discussion about the actual steps. But I think the first step is to just really understand the importance of what's happening. As a consumer in the world, we listen to people like Dave Ramsey, where debt is bad, and it's a great mentality. His audience, a lot of those people are struggling they overspend on credit cards and these kind of things. So it's down a road of they need to get those credit cards paid off, they need to pay off their mortgage, etc. But the mindset in business is completely different. The reason that business credit, the reason that debt, the reason that financing is so important, and the first step is understanding why it's so important, is because it's how 100% of every one of the largest publicly and privately owned companies has built what they built. And if a small business owner wants to launch and successfully grow, scale a business, have financial freedom, not have to worry about payroll, etc., it really is the most valuable tool that a business owner could use to do that. And just to give you an example, not to get too far down this rabbit hole, but if we just look at examples here of, let's say, two of the biggest companies. So, the most valuable company in the world, Apple. There's a reason Apple has $105 billion in debt, and they, have 130 billion cash in hand. Now, Dave Ramsey Stewart would say, I understand the math equation. I know what to do. Apple. You take your money, you pay off the debt. But if Apple did that, then they wouldn't have the cash they need for the R&D to be on top, to be able to expand the retail locations and be able to create the domination they have. That's the reason they're using business credit, especially, as well as many other types of financing, as tools to be able to pay the stuff that they can use OPM, other people's money, to do. And then that gives them the cash they need for expansion. Now, the master of this is the number one retailer in the world, and that's Walmart. 10,500 stores across the country. And what most people don't realize is that 80% of what Walmart puts on their shelves, they're literally using business credit to buy. So that means when you go into Walmart and you 1, 2, 3, 4, 5, 6, 10 items, you see 8 of those were bought on credit. Right. Walmart's not even paying cash for them. Walmart's going to Bounty and getting a credit line with Bounty, buying Bounty paper towels, putting those paper towels on the shelf. You're coming in, you're buying those paper towels, you're giving Walmart money. They take your money and they use it to pay off the credit. They have thousands of accounts and trade lines across their business credit reports, and they do this with 80% of what they sell. That means that business credit alone accounts for more value in Walmart than all shareholder value in the company combined. Now, I could go on and on, but if I had the ability to share screens and do webinars and stuff, I'd show you that every one of the companies is like this. So the very first step, I think, is just understanding the value of OPM and leveraging OPM to be able to grow and scale, because that's how all the biggest companies get there. Even if that's not your goal to be that big, it's still the key to success with small business owners to be able to do it. Now, tying back to your question, it's also one of the leading reasons that business owners have challenged personal credit. And it's not something to be embarrassed about at all, because it's a reflection of the fact that you're an entrepreneur. Entrepreneurs, we are risk takers. It's what we do. And our credit typically reflects the risks that we have taken. It reflects the risks that we take where things don't pay off. It reflects the risk that we're using credit cards and things that report on our consumer credit report, including personal loans, to try to fund the business, to be able to take home equity lines of credit, to be able to fund the business, because we are so passionate and believe so much in what we're doing. And sometimes things work out and sometimes they don't. And that's the benefit of business credit and of financing, is that you can separate liability, you can separate credit, you can create a credit profile for your business, and then have that actually be able to have the business fund itself, where you don't need to max out consumer credit reports, cards, and damage personal credit. You don't even need to have high limit consumer credit cards. You don't need to leverage your house and all these other things. You can keep your personal credit and assets safe or even if they're damaged, work on repairing those while you're building an asset over here, a business credit, and using that to be able to fuel the business. So I think the very first step is just to understand that picture. And when you get that, then you can start going down the road of tapping into OPM and being able to use it to be able to grow and scale a successful business.
So business owners, again, like you said, and I think you hit the nail on the head, business owners are in fact risk takers, right? So a lot of times what happens is you're moving, you're grinding, you're going a million miles a minute, and personal credit sometimes suffer while you're trying to build your business. That's the point typically where a lot of individuals are like, oh, well, I already jammed up my personal credit, so that means I can't get business credit. Is that true? Does business credit have anything to do with your personal credit? Does, one reflect upon the next, or how does that work? Or are they two separate entities in and of themselves?
So legally in the United States, there's only two types of credit profiles you can really have. One is consumer credit, right? And consumer credit profile is linked to your social security number, and it really depicts your risk of defaulting. Actually, the exact credit scores risk depicts your risk of going 90 days late on an account, right? Mm-hmm. Of you defaulting, and which is considered to be 90 days. So that being said, and it's over a 24-month time period. So when we look at consumer credit gauges your risk as an individual of repaying debt that is actually lent to you. When we look at business credit, it's somewhat similar, but it's actually a credit profile for your business. It reflects your business's likelihood to pay its own bills, and it's linked to the business's EIN. So these are two completely separate credit profiles. And if you do it correctly, then one does not have anything to do with the other. And what I mean by that is that I can build a $1 million business credit profile, as many of our clients do, without ever using my personal credit. No personal credit check. No personal credit scores are used. The credit issuers are never even looking at the consumer credit profile. So no matter how bad or good my credit profile can be, it doesn't make a difference. And why that matters is that if I have challenged personal credit, well, then it's a problem, because whatever's holding me back there is going to hold me back when I'm applying for business credit cards. I can't get 10, 20, 30, 40, $50,000 limit accounts. I can't get approvals if I'm letting them pull my personal credit and this is bad.
Right.
But even if this is good, the problem there is that, you've got inquiries that carry over here, and there's funding. And we could even talk about this funding today, like a program called Credit Line Hybrid, where even one inquiry in 6 months on your credit report can cost you $25,000 in funding. So I can tell you one of the most valuable lessons I've learned in spending, 20 years in financial services, especially with businesses, you need to protect your inquiries like gold, because it makes a big difference. When you're applying for a Bank of America credit card using a personal inquiry on your credit report to be able to fund your business, then what happens is when you go to apply for a loan, let's just say an SBA loan, and Wells Fargo sees a Bank of America inquiry, they're automatically inclined to not approve you because they see you're shopping, even if you're looking for two different kinds of credit financing. They don't know that.
Right.
So the thing is, you've got to protect consumer credit. You don't want to be able to get consumer credit cards where utilization is 30% of your score and then be using those to fuel a business. Because you and I both know that things cost twice as much as what we think they're going to cost. They take twice as long as what we think they're going to take. So when you think you're going to spend $5,000 on your consumer credit card to fund the business, it becomes 10, it becomes 15. Now your consumer credit's damaged, et cetera. So these are two separate things. And if you do it right, you protect your consumer credit. You don't have credit cards on here that are being used to fuel the business. Those are over here. You're not putting inquiries on your personal credit for things to do with business debts unless you have to. Those inquiries are taking place over here. The risk is over here, meaning if you default on these business debts, your consumer credit isn't in jeopardy. Your consumer assets aren't in jeopardy. And this is where SCORE, SBA, Inc., Entrepreneur, all the authorities say this is why you build this.
Right.
So you're not relying on this to fund the business. And what's interesting is if you take consumer credit away, this is what was designed to fund the business. Business credit literally is designed to make your business fund itself. It's what it was created for. But like you said, unfortunately, per entrepreneur. 90% of business owners don't even know it exists.
Right.
Let alone how to tap in again.
Right. And again, most of us have heard of the Equifax, the TransUnions, the Experian, and we think that that's all that there is, right? But then there's this whole other world out there that most entrepreneurs, especially in the trades, I've noticed this happens quite a bit. They're just not familiar. They're always thinking it's going to be Experian, it's going to be TransUnion, it's going to be Equifax, right? And then of course, they're always drawing on their personal credit, or even if they do have quote unquote business credit, they're still using these personal guarantees, where again, this now debt to income ratio that starts to actually hurt their business credit, which I think is a really interesting concept, right? Once you can kind of shift your focus and be like, no, this is its own individual entity, we should build this, that actually in a roundabout way almost benefits your personal credit, because now you're not having these, high balances on your cards and everything else. So we know on the personal side, we've got the Equifax and all of these deals. What are the credit bureau agencies on the business side of things?
So it's interesting. I often tell business owners, like, I didn't invent business credit. We just simplify the process for small business owners. But when we look at credit in general, the first and the biggest credit reporting agency that exists today and existed in the beginning is Dun & Bradstreet. Dun & Bradstreet was around before TransUnion, before Equifax, for Experian. So what we see here is that commercial credit actually outdates consumer credit. Credit for businesses was here well before consumer credit was ever thought of or designed. As a matter of fact, I'm a history buff, and one of the things I think is really interesting is we've had 5 U.S. presidents work for Dun & Bradstreet through their actual history. I mean, it's just been a huge behemoth organization, and they today are the biggest credit reporting agency and the biggest business credit reporting agency as well. Then we have Equifax and Experian. Those are the 3 major ones in the commercial side. Now, to give you an idea of the size of them, Dun & Bradstreet has 230 million records on file. Experian's the second biggest credit reporting agency with 23 million. Right? 230 versus 23 million. I mean, D&B is by far the behemoth. They're the one that everybody wants to spend a lot of time with building credit profiles, but you also want to build them for Equifax and Experian, because Equifax is typically used commonly by banks. So when you're applying for financing through banks, they really like Equifax. If you're applying for credit cards for your business, they really like Experian reports. And then D&B is used for any number of different purposes, including insurance. So you really got to build business credit across all 3 of those reporting agencies. And there's others like Credit Safe and others floating around as well. But if you just focused on those main 3, D&B, Equifax, and Experian, then that would give you credit profiles you need to be able to fund the business. Where
does Paybacks fall into the business profile mix?
So if we look at this, and I don't want to mean to get too far down a rabbit hole with consumer and commercial credit, but every credit bureau has a lot of different credit scores. So credit scores depict a lot of things, right? So if we look at consumer credit, for example, most people don't know that there's a score variant called a mortgage industry option, an auto industry option. And in those 2 examples, and I could go through 100 of these because there's a lot of them out, there's a lot of what are called scorecards. They focus on certain things. So what I'm saying is, if you go to get a consumer mortgage, the mortgage broker pulls a mortgage option score. And that mortgage option score weighs your mortgage history higher into the score than anything else. So there's all these different scorecards used by all different industries. So what I'm saying is that TransUnion, Equifax, Experian on the consumer side have a lot of different scores that are used for a lot of different purposes. And same thing applies to the business world. In the business world, we find about 5 main scores that are used by Dun & Bradstreet, 5 Experian, 5 Equifax. And the scores are pretty similar, like a score for suppliers, a score that literally depicts your risk of going bankrupt, of shutting your doors, of ceasing operations. And then we've got the main score. And the main score for Dun & Bradstreet is called the Paybacks score. Okay, Experian has one, it's called a telescore. We have the small business score with Equifax. These are their main scores. And what these scores depict is just solely how you pay your bills. And it's why commercial credit is so phenomenal. Because if we look at consumer credit, there's 5 components to the score. And what's interesting is if we try to fix one, we damage another. So a simple example, 10% of our FICO score consumer is credit mix. the mix of credit we have. Well, I don't have the right mix. I need a mortgage. I need a car loan. The minute I go get a mortgage or a car loan, my credit scores will drop substantially because now that counts in my utilization. So trying to improve one aspect damages another. It's why it usually takes many years of well-disciplined borrowing for us to get to 800 scores. Now we look at the business world. We look at a score like Paybacks. And what Paybacks does is just says, how do you pay your bills? All I have to do to get a good Paybacks score is get 3 accounts that report to D&B. I need to pay them on time or early. That's it. That's it. And what's astonishing is once I do that one simple thing that establishes a credit profile, it establishes credit score, and then that credit profile and credit score I can use to springboard off of to start getting all kinds of real usable credit to be able to grow the business without relying on consumers.
So that's perfect, because I think that this is a perfect segue for my next question, which is how exactly does a business start to get business credit and to start build these profiles and build their scores?
So the very first step of getting money in general, and it's interesting to give you a little bit of history of me. I owned a mortgage company, blood, sweat, tears, a lot of late nights, built it, successful. Mortgage crisis occurs, lost it all. Personally guaranteed everything for my business, right? $1 million successful business, didn't think anything of it. Something comes out of the blue, like, I don't know, a pandemic, right? Something we completely not control, no matter how good of an entrepreneur we are, throws us off base, business goes out. They clean out my personal accounts, literally took all the money in my bank one day, gone the next. My personal credit's ruined. All my credit limits are gone, all because I made the mistake of personally guaranteeing my debt. So for the business. So what I decided to do was eventually get into consumer credit, found business credit, realized it could have saved me. And now I am an advocate for every single person knowing and learning how this works. But what I found from beyond that is I got sucked into a rabbit hole because I realized that there's this whole sub world of what lenders and credit issuers are looking for that 99.9% of entrepreneurs have no idea about. And I refer to this as fundability. So fundability is like the secret sauce of what lenders and credit issuers are really looking at to determine approval. So for example, Rico, you've applied for a credit card, and when you did, you got one of two outcomes. You either got that instant message, you're approved, and oftentimes it tells you how much you're approved for, or you got that dreaded message that you'll hear by mail in 7 to 10 days. That's almost always a denial, right? I think very rarely is that letter, hey, congratulations. It's always, we denied you, here's the bureau we did it from, and da-da-da.
Right.
So we know within milliseconds, these computers are making decisions about us. The question is what are they really looking at? And what's surprising about fundability is there's about 125 factors to it. And it's really the first step to get your foundation built, which is one of the main pillars of fundability, before you apply for any credit financing. To understand, lenders and credit issuers have this criteria they're looking for, and it's like an open book test. If you understand what they're looking for, then you could just create exactly what they want to see and then feed it to their computers. Their computers are just checking off everything to give you those instantaneous approvals. Right. So we dive into fundability basics. So let's set up your entity. You want to be an LLC or you want to be a corporation. You never want to be a sole proprietorship. SBA itself even says that a sole proprietorship is when you're quote unquote experimenting with an idea. The SBA doesn't even refer to it as a real business. Right. So you've got to choose an LLC or a corporation. You need a separate phone number for the business. You cannot use a home phone. You cannot use a mobile phone. You can use a Ring Central, a Freedom Voice. It doesn't matter. I mean, there's really cheap virtual numbers, but you need to have a separate number for the business, and it should be toll free. You need to make sure that phone number is listed in directories, Yelp, Google, Bing. You want to go ahead and make sure that it's listed with 411 as well. So you want to get that number listed with these directories and make sure it's congruent. You don't ever want to change the number. It's all got to be the same. So you also want to get an address for the business. You don't want to use your home address. You don't want to use P.O. Box, a UPS address. You can go to Regis, Alliance Virtual Offices, DaVinci for $50, $75 a month. You can have a real office in a real commercial location and a real commercial address. So now we also want to get a website set up. The website needs to reflect what we do. Doesn't matter if you're an over-the-road trucker. Get it? It's $200. You could build your own website completely. And you want to have a website that's professional. You want to stay away from Gmail addresses. So if my website's creditsuite.com, my email is info@creditsuite.com. That's what you want to do. You don't ever want to use your company name at Gmail.
And also just as
an actual
right. And just as a tidbit, like there's so many business owners out there that still to this day, you see it on their truck. It's, Joe the handyman at AOL.com. I mean, it's just the first sign of lack of professionalism is that Gmail, Yahoo. It's like, really, you're really pinching pennies that much, So
it's astonishing. And this is what's crazy is I can tell you that I hung hundreds of thousands, maybe even seven figures of business of mine has been lost because of that one thing. I will not work with somebody that uses a Gmail. Like automatically you lose so much credibility for me that I'm out the door. Like my consideration of ever working with you is gone. So you bring up a good point, because when we look at fundability, it's not just really your perception to lenders and credit issuers. If we think about it, this is common sense perception to the general public. It's to our prospects, it's to our clients, it's to venture capitalists and potential investors and the people that want to buy the business. It's just our general credibility. And if we build a business on an unstable foundation, just like if we built a building on an unstable foundation, then the thing crumbles. So this is why we've just got to paint the perception of having a real legitimate, credible business. And if you compare the Apple to, you compare the two scenarios, we've got somebody that's a sole prop that's using a PO box, meaning they're not even telling lenders where their business really operates at. They don't have a website. They're using a Gmail address and a cell phone. And then they don't understand why a lender will give them 20 grand. It's like, it's astonishing. Why would anybody want to give you 20 grand? Now we look at it. Now they look and they see you're in a real commercial building here in downtown Tampa, Florida. They see that you've got a business phone number. Your business phone number is listed at all these online directories. You got a website that reflects what you do, a professional email address. You have a bank account set up especially for the business. You can get a license for the business if you can get one. If you can accept credit cards, and you should be, like a restaurant, well, then you clearly have on your website that you can accept credit cards. These are all clear signs of a legitimate business versus somebody that's just experimenting with an idea. And that's the very first step in building business credit and getting any kind of money. You've got to make sure that that picture is painted, that you have a solid foundation. And most importantly, above everything else, above all of it all, you've got to make sure that information is congruent. If it's incongruent, it's the number one reason financing gets turned down. You go to your bank with a stack like this for an SBA loan, and they deny you. And what you don't even know is the very first check they did, they took your application data and they pulled Secretary of State, and the two don't match. So their computers say, we can't even validate this applicant exists or is real. Fraud, fraud, fraud. And it gets pushed to a manual underwriter, right? You don't want to be that. You don't want to ever end up there, because that person's not going to go, oh, no, Bank of America, this is all good. This dude's legit. They're not digging individually. They're pretty much going to go with the computer's decision, because they're not going to lose their $30,000 a year job by saying, no, it's not fraud when it is. And fraud is the number one reason that these loans are turned down, because banks are plagued with it. So we've got to make sure it's congruent, and we commonly make that mistake. We set up our Secretary of State, then we get our website, our email, our phone number, our address, and we never go back and update it. We change our addresses, we change our phone numbers, and we don't change our social media pages. We don't change our website. We don't change our Yelp profile. And this is why what I recommend, getting a business phone, getting a business address, this stuff never needs to change. Even if you move 5 different states, 5 different locations, your business moves, it doesn't matter. That can always be the same. It can always be congruent, and that congruency is essential for you to be able to get approved for credit financing. So that fundability step is the most important step and the very first step of getting business credit or any kind of financing.
Right, which totally makes sense, right? And again, just kind of like what you said, it's all about just even how the general public perceives you, right? Because people do some hunting around, right? They will go to Secretary of State, they will see where your company is located, and then they'll look at your website, they'll see that on Google, it's got one phone number, on Facebook, it's got another phone number. Like all of these are very, very mixed signals, right? So at least getting everything, under, being congruent, like, okay, well, now when you're putting in an application, at least that that's not going to be raising the red flag, because it would suck to have everything lined up. And then all of a sudden, just because you've got a few things that are a little off, you're automatically, either denied or it's going to like manual underwriting. So that's number one, is creating that in order to create fundability, is to make sure that everything is congruent. What generally would be the next step that a business owner should take? But before you answer that, let's just take a quick break and thank our sponsors. Hey, Dominators, real quick, let me ask you a question. How would you like to increase productivity? How would you like faster claims resolution? And more importantly, how would you like to reduce litigation? Well, this is exactly what Impartial allows you to do. Impartial creates timely, accurate estimates for faster and fair claim settlement. Building upon Matterport's technology, the Impartial Scope tool extracts the relevant data embedded with pre-mitigation and post-mitigation scans, and subsequently renders an exactimate or assimilability estimate that can be approved by a carrier without any hesitation. The magic here is that the software helps contractors generate mitigation and repair estimates for more rapid approval from insurance carriers while removing the burdensome administrative process. Each impartial estimate is produced with objective accuracy using immersive 3D imagery and precise physical and geospatial measurements. Impartial, in my opinion, is one of those tools that simply can go ahead and change your business. And with so many features such as impartial tags, timestamp matter tags, the ability to upload JPEG, PNG, ESX, and so much more. Impartial is that software that could genuinely change your business. Make sure that you check them out in the video description below or in the show notes and see for yourself. Hey, Dominators, real quick, let me ask you a question. Have policyholders struggled to come up with your money because it's held with the mortgage company? Or does the percentage of uncollected debt that you collected in 2021 exceed over 2.5%? Or even better, let me ask you this. Do you dread negotiating with your policyholder when it comes time to collect your final payment and deductible? So look, if you answered yes to any of these questions, then you need to check out Surety. You see, Surety is a third-party fund control company. And what they do is they ensure that you get paid faster and, more importantly, completely for the hard work that your crews are doing. Surety relieves not only the policyholder, but you of tremendous administrative burden while ensuring the claims process and, more importantly, the proceeds flow via ACH to the rightful owner, you, the restorer. And here's the best part. For less than the average credit card fee, Surety delivers on numerous fronts. So here's what I want you to do. If you want to learn more about how Surety can help you, I want you to head on over to www.surety.com/dominate and request a free demo today. Now listen, Restoration Domination listeners, just like you, are going to receive a really cool offer. And here it is. You're going to receive an exclusive offer, which includes free processing for the first insurance claims check and 3 months of free access within their network. Again, that's Surety, SURETI.com/. All right, so we are back, and where we left off was what is the second step that a business owner needs to take after they've established their credibility, their, all their information is congruent. What's the next thing that needs to happen from there?
The next step, whether it be a next step or part of step one fundability, you also want to get your DUNS number set up with Dun & Bradstreet. DUNS number is 100% free. It's a 9-digit number that's used to identify your business worldwide. So much like the EIN is used here in the United States for the IRS to identify your business, the DUNS number is used worldwide. So the U.S. government uses it. The Australian government uses it. The United Nations uses it, for example. It's used by 50 plus global trade organizations. So the DUNS number is 100% free. It takes about a week to 3 weeks to typically get from Dun & Bradstreet. Once you have everything set up in fundability, your address, your phone number, et cetera, then that's all going to be needed to get your DUNS number. And even if you are applying for credit and they don't ask for your DUNS, I still recommend supplying the DUNS number. I'll give you an example. I had a business that I got a Staples card, got denied. Said, why would that be? I have plenty of business credit. My business credit is good. No, we can't find any business credit for you. I said, okay, I don't even know how that's possible. All the information here matches, but here's my DUNS number. Within 2 minutes, rep gets off the phone, comes back on, and approves me for that account. So ever since then, I put my DUNS on every single application for credit financing, whether they ask for it or not. Again, one more sign of professionalism, one more sign of credibility. So now that I have the fundability built, the next thing I want to do is I want to get initial credit. I want to start building a credit profile and score. And there's two main ways to do this. The first is a program called Credit Line Hybrid. Now, Credit Line Hybrid requires good personal credit from you or a guarantor, someone around you that has good personal credit. The second route doesn't, so we're going to get to that. But if you have good credit or someone around you does, Credit Line Hybrid is a way where you can get $50,000 to $150,000 in real usable credit lines, even as a startup, even as a new business owner. Ultimately, you get 0% interest rates for up to 18 months. You could take the cash out at 0%. That's why it's called a Credit Line Hybrid. The benefit of a credit card, you get 0%. These, you get that benefit. Credit line, the benefits, you could take cash out at a low interest rate. Here, you literally combine two powerful benefits. You could take cash out at 0% and be able to use to actually fund your business. But most importantly, a lot of these cards and these lines you're getting report to the business credit reporting agencies. So you're actually legitimately getting the money you need to fund the business. And in doing so, you're actually building business credit because they report to the reporting agencies. Now, the second route's more common and popular because so many people have credit issues. And that is using what are called starter vendors. And starter vendors are basically, well, a vendor is basically somebody that will extend you credit to be able to buy their products and services. So a lot of people are vendors, right? Staples and Apple are vendors because you can get credit cards in their stores that let you actually buy stuff in their stores. But starter vendors are unique because of two reasons. First of all, they will give you credit when you have none. You could have no credit profile and they'll still extend you credit. And the other thing is they report the credit to the reporting agencies. You see, that's why business credit is so hidden, because if I go to Target today and I check out, they offer me 20% discount if I get their credit card. And if I say yes and I get a Target credit card, I guarantee that Target consumer credit card is going to end up on my consumer credit report. If I go to Best Buy, it's going to be the same way. If I go wherever I go, it's going to be the same way. In the business credit world, though, it's the opposite. Over 90% of trade vendors, 90% of these vendors don't report the credit they give you to the reporting agencies. It's why we deal with $3 to $10 million companies that are denied credit lines or credit lines pulled back because they don't have business credit, or business credit's bad just because it doesn't exist. They think all these people gave them credit and they're building business credit, but none of them reported the credit to D&B, Equifax, Experian. It's a harder process than what most recognize. So we've got to find these starter vendors that will give us credit when we have none. And we've got to be able to get ones that report to the reporting agencies. So some simple examples here is Uline. Uline sells shipping supplies, stuff that's very common that most business owners could use. They'll give you credit when you have none. They report it to the reporting agencies if your fundability is set up correctly. The same thing with Grainger. Grainger sells all kinds of outdoor workwear, kind of outdoor work supplies. I don't work outdoors, but I get batteries, first aid kits, like, with two kids, there's no nonstop first aid kits. Just keep them coming.
Right.
I need them all the time.
Right.
And same with batteries.
Yeah.
Like I never read this. But the bottom line is those things you could buy. You can find stuff at Uline Quill to buy just about anything. There's one called CEO Creative as well. So there's these kind of starter vendors. You've got to go. You want to go set up an account with them online for free. You find the product services or the products you want. You put them in your cart. You go to checkout, and they typically offer an option similar to Invoice Me. And that's what you choose. And the minute they ship the items, you're approved. There's no congratulations ceremony. There's no congratulations, you're approved for 10 grand. There's no credit card in the mail. The fact that they ship the stuff to you and you didn't have to put a card in to get it, it means they just extended a credit line. You can call them to see how much the line is. It's the only way you'll know.
Right.
But that bottom line is you were just extended credit. When you do this with a handful of these vendors, that will give you basic credit profiles, basic credit scores with all three of the reporting agencies, and the foundation you'll need to move to the next step. Now, one thing I want to say before we move to the next step is that Equifax and Experian will actually give you failing business credit scores if you have no credit. And this is why if you really want to grow your business and get money, you don't have an option. It's not like you can do this or not. You have to do it, because what will happen is eventually the business will be applying for more money and you'll just straight out get denied or get credit lines pulled back because you don't have it. So Equifax and Experian will give you a failing credit report if you have no credit reporting, and you need one account reporting with them to turn that around, or one to establish a report and score. D&B requires a DUNS number and 3 accounts reported to them before they'll give you a profile and score. But once you have a handful of accounts, all 3 of the bureaus are set up. Now you have accounts with all 3 bureaus. Now you have trade lines. Now you have scores. Now you can move on to the next step in business credit.
Which would be what?
Well, the next step is just going through tiers of credit. Mm-hmm. So ultimately what we do is we go from starter vendor to retail credit. And retail credit is credit with every major retailer, from Sam's Club and Costco to Apple to Staples, Home Depot, Lowe's, even Nordstrom and Macy's offer business credit. All of this at this point can now be obtained without a personal guarantee and without a personal credit check. And the key there is that in 2018, the government requires banks that issue credit to get your social to verify your identity. They have to. It used to be you just never supply your social and you're good. Now you have to supply a social, but only for identification purposes. If the application you're filling out doesn't clearly state that, like fleet cards where you get fuel, they're very clear on this. When you go to fill it out, it says, we are asking for your social for identification purposes only. Because you're supplying it does not mean you're authorizing a credit check or guarantee. That's the wording you want. If that wording's not there, then it might even be required that you fax or call to apply versus apply online. But you never want to supply the social unless it's clearly stated that it's for identification purposes. Because if you do, they're going to do a credit check. They're going to attach a guarantee. But if you do it the right way, and I call Staples or apply online and they say, okay, it's only for ID purposes, now the credit I'm getting in the retail step, it doesn't have a guarantee. They're not doing a credit check. They're not doing a guarantee. I'm not personally liable for it. I don't have to supply a personal credit check. My personal credit quality is not a factor in the approval. And then when I get about 8 accounts total on my business credit reports, that's where I can move to fleet credit, fuel, repair, maintenance of vehicles. Almost every major fuel station across the country offers this kind of credit. And then we get to the final tier of business credit building, which really is 14 accounts reporting on our business credit reports. And that gets us to what we call universal credit, which is Visa card, MasterCard credit we can use anywhere. And it also gets us to auto financing. So one of our clients, Christine, for example, got $185,000 in financing at Ford without personal guarantee, without a personal credit check. This is where you're usually at $20,000, $30,000, $40,000, $50,000 individual credit lines on the actual money that you're getting. And that from that point on, you could pretty much get almost all kinds of revolving credit without a personal guarantee.
And generally speaking, right? And of course, there's, different situations for different individuals. But as a general rule, if someone was, let's say, starting a business today, and they wanted to go ahead and start doing things the right way, they get all of their, let's call it, social profiles, in other words, their front-facing profiles are set up properly. That means the website, their Google business listing, all the citations, everything is universal across the board. They get their Dun & Bradstreet number, which a lot of businesses don't even have a DNB number, don't even know that it exists. They get all of that stuff. They start getting their simple credit like the Staples and things of that nature. And they've built up their first 8 accounts or 14 accounts, and now they're ready to go ahead and start getting bigger loans, bigger access to real funding. If we could put a timeline on it, what would be a realistic timeline for a brand new business that's just starting to the point of being able to feel safe going into a place and getting the funding that they need to really start their business?
Funding is a different conversation we should have because it's definitely business credit is an aspect of financing, but it's not at all, right? There's a lot of loans and credit lines somebody can get from the startup.
Right.
If they've set up their business where they're fundable, they can immediately get money, right? Credit line hybrid is one example of somebody that can immediately get money for somebody to launch a business. IRA, stocks, bonds, 401k. You can borrow against any of that and get 5% credit lines to be able to fund the business. So there's a lot of money you can get right in the beginning if your fundability is correct. But if we talk about business credit building, a typical business owner will get to that final end step in about 2 years or more. Our clients get there in about 6 to 9 months. So not saying you have to be our client to get the expedited results, but the bottom line is you get it. If you're working with somebody that knows how to avoid the pitfalls and actually working with like a really qualified company or coach to help you, you can get to that very end of the business credit building process in about 6 to 9 months. And all the long way, you're building credit. But I do want to say it's a tough question because the reality is everybody's trying to get to the end and there is no end. Like you never stop building consumer credit. You never stop building commercial credit, right? You continue to get credit with more and more places as your business continues to grow and scale. But when you get to that place our clients get to in 6 to 9 months, you've got 14 plus accounts. You're able to get most kinds of revolving credit without a personal guarantee, without a personal credit check. Your limits are $20,000, $30,000 or higher on your individual accounts. And what I do find is that 85% of what a business owner needs to spend money on, they could just use corporate credit for. What we just talked about, the credit they can get, that funds not 85% of what they need. What I mean by that is that, my standing desk here, my keyboard, my microphone, my cameras that I have set up, my everything here can be bought at Staples. It can be bought at Sam's Club. It can be bought at Amazon. It can be bought at places using corporate credit, but I can't pay payroll, right? That payroll fits into the 15% where loans and credit lines are more applicable. But somebody can get there if they know what they're doing and they're avoiding the pitfalls in about 6 to 9 months. And by the way, what I mean by that is not applying for credit you can't get. The biggest pitfall is that business owners jump tiers.
Mm-hmm.
They jump starter vendors. They go to their bank to get a credit card, right? They skip fundability, and they're out there trying to get business owners to give them money, or lenders and credit issuers to give money when they're not set up in the credit. They skip steps,
right?
Or they're applying for a Staples credit card when they really should be applying for Dell first,
right?
And work their way up. So that's where the proficiency comes in, is what the specifics within each tier to apply for that you can get approved for. If you don't, it's just a trial and error, and that trial and error is what usually wastes.
Right. And I guess my question was exactly that, right? Like, at what point, because most people are like, okay, great. Well, now I've got my front end. Everything looks good. I've done my Dun & Bradstreet. I've got a couple of trade lines that I know are reporting. I've been seasoning them, if you will, for 2-3 months. You know what? But I really need a business credit card because, I'm going out and I'm having lunches and I'm doing this and I need gas. So let me go ahead and apply for that business credit card. And then you just get punched in the gut because all of a sudden now you got a denial, right? So it's really knowing, like, when are you, or when is the entity, that business entity, actually ready to, number one, get those credit cards, and then number two, step into a bank, a local bank or credit union, and ask for a loan. So what you're saying is that there is in fact a method to the madness in order to eliminate a lot of the guesswork. And how do you guys help with that? Just out of curiosity.
Well, and I want to talk about financing as well, because walking into your bank, and there's places that you want to walk in and have better chances of getting financing than not. But to give you an idea of how we expedite things, our tech, our software, our coaches map out the exact tiers of credit to apply for in what order. So we have a data team that calls, in contact with every underwriter from every card issuer you can think of, thousands. And we verify that information on an ongoing basis. So if you have access to our system, we say, look, you want to apply for Staples. Based on what you now have in your credit report, you can now get approved for these accounts. Here's the underwriting guidelines. Here's the quick link to get approved. So they're only seeing, we've got about 5 stop gaps, or 5 ways of saying, don't apply for this stuff yet. You're not there. Apply for this. Now you move to this. Now this window opens. Now all this becomes available. Now this becomes available. So business owners, bottom line, is are only applying for what they can actually get, because that's where the frustration in this process comes. And that's where the time delay comes, right? As I apply for Staples and get denied, and then I get frustrated. Then I go to Office Depot and get denied. Then I go to Amazon and get denied. Then I go to Home Depot and get approved. I'm like, yes, I finally got one approved.
Right.
And it's just these denials and this negative frustration of getting denied. What we try to do is just create a world where there are no denials. It's, if you understand what lenders or credit issuers are looking for, it's really simple. You either meet the criteria or you don't. So we build the fundability. Then we start opening up the gates of what they can get. They're only applying for what they can get. They get the credit, they use the credit, their credit file becomes bigger, and the bigger and bigger it gets, the higher the recommendation credit limits from the bureaus, and then the more tiers of credit become available for them to be able to get to the final step where they could get just about any kind of revolving credit at that point.
I love it. And I definitely want to touch on the whole financing aspect. But before we kind of jump into that, because I think that this may tie in, how important is cash flow? In other words, the physical dollar number that is entering a business, and how that affects not only their credit lines, right? Like what they actually have the ability to get credit lines for or credit cards for, but then also on the lending side. And just to give you a little bit of context as to why I'm coming up with this question is because a lot of times business owners don't grow, or they can't do the things that they need to do in order to really get that cash moving, because they just don't have the financial wherewithal. So really what they need is they need that quick shot in the arm, which could be a credit card, could be an Amex, it could be walking into a local credit union and getting $50,000 in, unsecured, financing, whatever the case may be. And that's kind of like what they're building for. And that's what they're trying to get to. So does the dollar figures that are entering the business bank account have a huge impact on your ability to build credit and then eventually get the credit cards and the financing?
So 0 impact on your ability to buy credit, and a big impact on your ability to be able to get some kinds of financing. And what you asked is a perfect question that segues into the financing piece. So if we look at this, what's nice about business credit and everything we've talked about so far is you can get it without having any of the main factors lenders look at. And we call these the 3 C's. So the 3 main factors that lenders look at are credit, cash flow, and collateral. Those are the three things that they care about. Well, business credit's really the only main kind of financing you're going to get where these three don't matter. You don't need to verify cash flow. You don't need to have good personal credit. You don't need to have collateral. It's unsecured. So this is money any business owner can get. I don't care if you're in a high risk industry. I don't care if your consumer credit's trash. I don't consider if you're just starting it, you don't have any revenue. Everything we've talked about, 100% of it, you can get without having any cash flow, without verifying any cash flow. All of this can be obtained for any business owner that has a business within the United States. Now, that's one aspect of financing. Then we look at walking into our bank. We look at walking into a credit union. We look at the other kinds of money that's available. And the reality is that in itself is the mistake that almost all business owners make. They want money to go to their bank. Their bank is the worst place that they could go to. Don't get me wrong. Eventually, you should walk into your bank. But you don't walk into your bank until you're very well established. And here's what I mean by that. Banks are very conservative in their risk. Okay, a lot of people paint them out to be very bad people, and I love that position too. Banks are bad. But the reality is they're government insured. The government requires them to be conservative in their risk. The majority of business owners fail. It's just the way that it is. So inherently, lending to businesses is very risky, and it's something banks absolutely have to avoid because of the regulations that are put upon them. But there's a loophole, and the loophole is SBA. SBA guarantees up to 90% of the loan if the business owner defaults. So SBA gives the big banks like Chase and Bank of America and your local credit union, it gives them the means to be able to lend to small business owners because SBA is taking on the actual risk. But then inherently is the problem. Now we have to meet a bank's underwriting standards and SBA's. And these standards are pretty simple. First, you need to have excellent personal credit. We've had clients with 780 FICO scores get denied because of one late payment with an SBA loan. You have to have established business credit. SBA loans use a small business score from FICO called FICO SBSS. It mathematically is impossible to have a minimum 140 score SBA requires without building business credit. SBSS takes into account business credit. You can't even have an acceptable score without it. So now we're talking about a business owner with excellent consumer credit, established business credit, 3 years of tax returns. No startups. You got to be in business at least 3 years to have those. And the tax returns need to show profits and that your business is actually growing. And most important, you need to have collateral equivalent to what you're borrowing. Most businesses starting out, they don't have that. They don't have account receivables. They don't have equipment. They don't have inventory. They don't have the assets. So then a business owner is pledging their house as collateral. They're pledging every personal asset. And I've actually stood on stage to large audiences and shown SBA's underwriting requirements. And SBA clearly says, you take every single thing you can take as collateral until it's equivalent to the amount that somebody's borrowing. So yes, there's a great time to go into your bank. We're there. We get SBA financing for $250,000, $500,000 literally within 3 weeks' time, and we'll do it at our bank. But we're very well established. We have all those things. Most of your audience, most of our clients, they don't have that stuff. So now what we're going to do is we're going to break down these 3 C's, and we're going to find out where our strength is. Cash flow, credit, or collateral. Which is our strength? SBA requires all 3. But 90% of lending that takes place today comes from fintech lenders, alternative lenders, online lenders. And these lenders only look at one of the 3 factors. So do you have good consumer credit? We talked about credit line hybrid. Perfect example of financing you can get if you do. Only that factor matters. With that program, collateral doesn't matter and cash flow doesn't matter either. You could build business credit, the other part of the credit C, right? And only based on that credit, you're able to get funding with nothing else. Maybe the second C is cash flow. And now we have 6 months worth of cash flow. And maybe we run money through PayPal, Square, and Stripe. They offer fantastic financing for small business owners where they'll lend us as much as 30% of what we're processing through them. Or there's financing called revenue financing or merchant cash advances. We can legitimately get money in 72 hours in our bank account just because we verify that we have consistent cash flow and then we manage our bank account responsibly. Like we're not overdrawing the account. We have money in the bank and at the end of every month, just because we manage our cash flow, nothing else. My credit could be trashed. I have no collateral. I'm still able to get that kind of financing. And the third C is collateral. And it's the biggest category per se of business lending because there's so many assets that can be served up as collateral: stocks, bonds, 401ks, IRAs, book of business. If I'm an insurance broker, commercial real estate, residential real estate, we can look at vehicles. You can look at the fact that you're an e-commerce business and you're using what you're selling, your inventory, as actually collateral to be able to get financing. There's options where you can get 100% of the money you need to buy the inventory you're selling online. So the question is whatever the asset is that could usually be served up and be able to get very low interest financing where the other two C's, credit and cash flow, don't even matter. So you got to focus, if you want money now, on what is your strength. If you don't have a strength, that's why building business credit becomes very important. And if you do have a strength, credit, cash flow, or collateral, that opens up money well before you'll ever get to walking in your bank or credit union to be able to get money.
Tons and tons of great stuff. And we're running out of time. So, and obviously there's so much to that, we can discuss and, definitely go down a lot of rabbit holes. Right. But I think that the fastest and easiest way is obviously if anybody's watching and listening, they're like, man, you know what? I really want to go ahead and build my business credit. How is it that you guys can go ahead and help the audience if they so choose?
Sure. Go to creditsuite.com/EIN. creditsuite.com/EIN. There's a great guide that maps out more in-depth business credit building. So we dive more into fundability. We provide more starter vendors. It is 100% free. So this is like the Bible. I mean, it's over 1 million downloads online. So it's the Bible that gives you the step-by-step in-depth of what we talked about to navigate through the steps of building business credit. And by the way, when you're at creditsuite.com, just check the top right of our page. Our podcast has 700 plus episodes, so a lot of people are listening on the go. We've got all of our social channels there as well, where you can come in and see our 1-minute videos on Insta and TikTok, all the way to 1.5-hour trainings where we map out every single step, look at case studies, look at actual approvals, everything you need to be able to get capital. But almost everything we teach about is about one thing: getting money for a business, how you get grants, how you type into different kind of financing. So if you're interested in getting money now and through the life and expansion, just hit the social links, less than a minute on the top right of our page at creditsuite.com. And that way you can get ongoing information. We go live 3 times a week with training. This way you'll have everything you need to be able to get the money you need to start, grow, and be able to scale the business.
That's awesome, Ty. Well, thank you so much, man, for taking the time out of your day to go ahead and educate us on exactly how business credit works and help us ultimately dominate. And for all those dominators out there, make sure that you go ahead and check out restorationdomination.com. Check out this episode. I'm going to have links not only in the video description below, but also in the show notes, and links to all of his Ty's social media channels, websites, and all of the resources that we mentioned today. And as usual, remember to get out there, hustle, hack, dominate. I'll see you guys on the next one.
You've been listening to Restoration Domination, your #1 resource for tips, tricks, and hacks to help your business grow. Subscribe to our channel and follow us for more Restoration Domination. And follow our host at Rico Garcia Jr. on Facebook, Instagram, TikTok, and LinkedIn. Till next time, this is Restoration Domination. Hustle, hack, dominate.